So our real estate company has raised close to $1 billion over the last, call it 6 years or so. People ask a lot about raising capital and how do we do it for our real estate deals. I would say the number one aspect to raising capital, it's not about knowing your numbers, it's not about knowing your real estate. Certainly you have to know those things, but what's most important before any of that is the trust that you build up with the people that you're trying to raise the money from. And you have to think about it this way. When you're going to an investor, and for us, we're often going to institutional partners. And what that means is these are major real estate groups that get their money from university endowment funds, teachers unions, large separate accounts, which are very, very large family offices that might manage for billionaire type families. And these groups, essentially fund managers, manage this money, which we call institutional. And their job is to place that money in one of the businesses that they like to place it is in real estate. The fund managers, it's groups like Goldman Sachs or Blackstone, and there's a whole host of others all around the country. They're popping up all the time. They're very sophisticated because they're managing huge sums of money for sophisticated investors. But the deal is for the money that they're managing, oftentimes the investors that they're managing, let's say Harvard Endowment Fund, the folks that they're dealing with may not have an expertise in real estate. So the fund manager's job is to make sure that the company that they're partnering with knows what they're doing in real estate, but more importantly, that they can trust. Because that fund manager, their reputation and their job is essentially on the line with the money that they're giving you, the real estate developer or the real estate service operator, to put into one of your deals that you're bringing to them. And if that deal isn't successful, that fund manager is going to take the heat for that. So it's hugely important that you build up trust. Now, building up trust, that is when you got to show your expertise. You got to show that you know the real estate space. You got to show that the deal that you're offering, you know inside and out. I have a course on this that I put together that we go through all of the things that you want to do when you present a deal. But this is as early on as when you first make that phone call to the potential partner or you make that first email to the potential partner. Every single step along the way of the capital raise is critical to building up the trust. And if it's not an institutional group, it could be a high net worth individual. The same principles apply. So when you go to send that first email, you got to think about the fact that the person on the other end, just like you, probably gets a lot of email all the time. And the last thing they really want to do is go through this big thesis on a real estate opportunity. Especially today, we see it all the time with Claude or ChatGPT or any other kind of AI format where people are sending these huge reports. Who wants to look through all of that, right? When you're talking about a deal, simple is more. That's the biggest thing in any industry. If you can take something that's really complex, because normally a real estate deal is, whether it's a ground up development or whether it's an acquisition, we do both. We do ground up development for industrial, multifamily apartments, data centers, retail shopping centers, pretty much everything. And we also buy all that stuff as well. And then we have brokers that do all the brokerage around that. But it doesn't matter what sector or what deal you're doing, it's complex. And so when you have a complex real estate deal, and pretty much any real estate deal is, you got to find a way to take that complexity and break it down into simple terms. And why is it complex? Well, think about it. First of all, with real estate, it's always about location, right? So you've got to sum up the area and why you like it. And then when you think about the economics around the deal, between the NOI and the cost, the yield on cost and cap rate and exit and assumptions, and there's all kinds of things. And so the ability to take the complexity and break it down into simple terms is an art. But before you begin to do that, you have to be intentional about wanting to do that. You have to understand that if you're just going to send some investor package, investor memorandum to some potential investors that's 30 pages of a bunch of stuff, you're already stepping forward the wrong way. Okay, and it's great to have backup information. It's great to have a package and to have all that detail. But you have to roll up your sleeves and make the extra effort to summarize that investor package, to summarize that deal in an email where somebody could be in their car and look at it from their phone and be able to understand it. They could be moving, they could be doing 100 different things, and they could see that and they could understand it. Well, you might say, well, how do you do that? We lay it out. We actually provide our entire template on how we do that in an email. It's actually literally headings from the very beginning to the end on the things you want to cover in a deal, and you can get that. But if you don't want to do that, think of yourself. Just think of yourself. You have to put yourself in the investor's shoes, and you've got to think about what is important to them. Think of you. If you received a real estate deal, what would be important to you? You'd want to know where it is, obviously, right? You'd want to know how big it is, what's the square feet. You'd want to know what the NOI is. You'd want to know how much equity is involved. You want to know what that equity can make. And that's another thing. Does your investor want to hear whether they can double their money, which is an equity multiple? Do they want to hear the overall return over the life of the deal, which is an IRR? Is it a deal that's more of a cash on cash situation where you're holding it long term and they're going to be making essentially money on their cash on an annual basis? You've got to determine that, okay? You got to know to your audience. But the bottom line is they're going to want to know what kind of profit they can make. They're going to want to know how long the deal is. They're going to want to know why you like it. And here's a big one. For you to develop trust early on with that email or even that phone call, talk about a problem with the deal. I say this all the time. Talk about a problem. Dig yourself a hole, then dig out of the hole by showing your expertise. Instead of talking about how great you are and all the wonderful things you've done in the real estate world, how about do it this way? How about look at your real estate deal? Look at what would concern an investor, something that might concern you. Every deal has risk in our business. It's easy to find a concern. And after you find that concern, then talk about what you're doing to mitigate that risk. That is how you show expertise and build trust the same way. I cannot tell you how much easier it is to do a deal with a partner when they've already done a deal with you and the deal is done well. One reason and one reason only, they trust you. So when you're a first-time investor, that investor is gonna need to trust you. So you're gonna have to come out of the gates differently than your competition. You're gonna have to get to know them, develop rapport, talk about your core values, talk about what's important to you, talk about why you think the deal is important to them. Don't approach it with your hand out. Approach it thinking, how can I provide value to this investor? Why would it be a disservice to this investor if they don't invest in this opportunity? That's how you need to approach it. And when you focus on trust first, it might take longer, it might take extra phone calls, it might be harder work, but in the end, it is so worth it. And I can't tell you how many times in an opening phone call with a new investor, we talk about our culture, who we are, our value system, what we like in real estate and why. It's all about the rapport early on. It's all about the relationship early on before you get an actual check from them. And then once you do, you got to prove yourself. So you better be doggone sure that you believe in the deal that you're presenting. And you better be sure that you lay out the risk and what you're doing to mitigate those risks. So I hope that helps you when you go to raise capital.